All right, welcome Facebook, YouTube friends. Okay, we are going to get started in just a minute. So I was just explaining with my life story. So after my financial meltdown, I had to rebuild. And part of that, big part of it, was rebuilding my credit. Okay. When I say financial meltdown, I mean, I went through the foreclosures, the bankruptcy, you name it, I've been through it. So I know how to start from the ground up. And trust me when I say it, doing it 15 years ago was a lot harder than it is today. There are a lot of tools at your fingertips to rebuild credit right out of the gate. Okay, so it is actually quite easy for me to take someone a day out of bankruptcy and get their credit scores up above a 700 in 12 to 18 months. Sounds crazy, but there are a lot of tools out there to do it. So I had to do things the old-fashioned way, writing letters. What I didn't do was employ the services of some of these credit companies out there. And I'm going to touch on a lot of them, right? Credit consolidation companies, debt consolidation, you name it, all kinds of things out there. I will tell you 90% of them are for-profit, taking advantage of people. Most of these things you can do yourself. So today we are going to go over everything from A to Z, what we look for in the mortgage world with regards to credit approval and how to get a quick spike in your credit score. So I always tell people, you give me 60 days, I can get 90% of the people's credit scores up 60 points in 60 days. It's very easy. I'm going to give you the tools, but more importantly, I want you to understand why we're doing this and why it works the way it does. Okay, so with that being said, I'm going to just jump right into it. So who is today designed for? This webinar is specifically designed for people. You know what? My apologies. I'm going to rewind this, record this. There we go. Okay, so this webinar is designed for people whose credit scores are anywhere between 500 to 600. Okay, my goal is if I get your credit scores up in those high 500s, you're in striking distance. Okay, there are programs out there to purchase where your credit score just needs to be at a 580. I mentioned a few moments ago, before we started the recording, there is a program that will be surfacing again. There's a lot of chatter out there. I'd be shocked if it doesn't come up, where there are no credit scores, $25,000. I had a good half a dozen people that qualified for that and got into it last year. We were able to get people into homes with a free $25,000 with credit scores all the way down to a 540. Okay, so those were in 9 zip codes. No, I take that back. That was anywhere in the city of Detroit. Okay, there is one program right now that I am a huge fan of. If anybody's looking in the city of Detroit, $75,000 for people to purchase homes. So that one requires a 620 score. So there, for those of you that have never been to one of my free webinars, how to buy with no money down using home buying grants and down payment assistance programs, please, follow me. I'm going to give you, I'll give you my information. Make sure you go to one of those webinars. And please save my information. If you know of anybody that's looking to make a move, have them attend one of those webinars. Whether you have a down payment or not, why leave free money on the table? Okay. And the way that things are shaping up right now in Washington, there is going to be a lot more free money, in my opinion, coming down the pike. For those of you that weren't in tune with the announcement, and the vast majority of people, even in my industry, in real estate, even in the mortgage world, didn't catch this. But U.S. Secretary Bessent had an interview back on Labor Day that there is a housing crisis. So this current administration is aware of it, okay? And Bessent, anywhere Trump goes, Bessent is there. That guy is his financial man. So when he does an interview acknowledging that there is a housing crisis, and that the current administration isn't touching any of the programs that are out there. In fact, they are looking for ways to introduce more value through tax credits. Whether those tax credits are on your tax returns or issued at closing, we don't know yet. My personal opinion is if the government wasn't shut down for 40 days, we might already be looking at some of these programs. So he also used the words executive order in his interview. I think it was almost verbatim. Don't be surprised if President Trump issues an executive order combating the housing crisis. And the big thing with the housing crisis there's a few things, but the two biggest things, in my opinion, are number one, the average first-time home buyer is approaching 40 years old. That's an alarming number. So we almost have two generations giving up on home ownership. And number two, the affordability of homes. Okay, we're watching property taxes increase, homeowners increase, insurance increase. So we're getting hit in southeastern Michigan, where I am, but the rest of the country is getting hit even harder. Okay, so they are trying to come up with ways to combat this, and I'm sure you can see it in the headlines. So anyways, so with that being said, now is the time to get your house in order and get pre-approved, because once all of these things are released or announced, the floodgates will open. And whether or not the inventory is there, I don't know. That's my fear. If the inventory isn't there, then these programs are going to do nothing other than drive home prices up even more. Okay, so but it doesn't do you any good if all this money's out there and you can't tap into it. So I tell people, get your house in order now. Start looking as soon as possible. Get educated with the market. That way, when value is placed in front of you, you won't think twice. You're going to jump right on that house. Okay, so with that being said, today is designed for people with credit scores 500 to 600. Our goal to get you up to the approval zone. No credit scores. If you have no credit scores, great. We're going to show you how to get those created. If you had a recent bankruptcy, repossession, or collection, we're going to show you exactly how to handle those. And anyone who just wants to understand the mortgage credit hurdles, how the credit applies to the mortgage world, what credit scores they're using, things like that. So with that being said, let's just jump right into it. So why I do this, the rental market, it's pretty disheartening what's going on in the rental market, okay? What you get for your money, absolutely disheartening. The amount of slimy landlords, and I apologize, I always get a landlord or two that ends up on my webinar, and I realize there are exceptions to every rule, but I find that there are a lot of slumlords out there, okay? So, and I find that a lot of people are overpaying for credit, and more importantly, credit repair. Okay, I am here to tell you credit repair is done. Artificial intelligence is just leveling that industry right now. You can do this on your own. Okay, and towards the end today, if someone can remind me, I'm going to show you how to use AI to fix your credit. Crazy, but I think it's important for you to know how the whole process works, and we're going to teach you that over the next 50 minutes. So I promise you, we're going to have you out of here in 1 hour. I do appreciate everybody showing up on a Saturday morning. It gets me moving early. 9 a.m. on a Saturday. I've been getting a little lazy over the holidays. So I appreciate you all showing up and getting me moving. So our goals through this webinar is to teach you how to get your credit score up 60 points in 60 days. That's the minimum, okay? With a lot of these techniques and tools that we're going to put on your lap, it is possible to get your scores up higher, okay? I prefer to I don't want to overpromise, okay? I want to underpromise, overdeliver. So these tools do work. We're also going to teach you how to identify areas on your credit report that are ripe for a quick impact. Some things work better than others, okay? We're also going to help you add new credit. If you don't have any credit, we're going to teach you how to add new credit to your credit report. And we're going to set reasonable goals with a good, predictable, successful timeline. No fluff, okay? I don't want to promise you this is going to happen overnight. It doesn't, okay? But very few things that are worthwhile in life do happen overnight. Okay, so first thing I want to jump into, all right, if you have any questions, please toss them in the chat box, okay? There's a box, you'll see meeting chat, just type your questions in there. Now, I'm flying solo today. I'll try, if I see the questions on the corner of my eye, I'll try to answer them if they're on topic. If not, I promise you, we will go back and I will answer every question that you have. Okay. So I am here. I'm planning on doing this till 10 a.m. and then I am yours. If it takes an hour to answer questions, so be it. I'm here for the duration. So first thing we want to cover is the mortgage industry and how credit works in it. So there's actually a lot more than 3 credit bureaus, but there are 3, the big boys: TransUnion, Equifax, and Experian. Okay. So these credit bureaus offer credit scores ranging anywhere between, boy, I got to learn how to spell range there. Never got to correct that. From 300 to 850, there's 3 different scores. Okay. There's your middle and higher score are the ones that we are going to focus on. Okay. There's actually 2 major scoring models. There's the FICO scoring model and the Advantage. Okay. So when you go out online and look at, let's just say, Credit Karma, okay, they are going to give you the Advantage score. Okay. And oops. So it's Vantage score. So those of you that are looking for the free stuff out there, and they're great tools. I like Credit Karma, but it gives you the Vantage scoring model. That's not what they use in the mortgage world. Most major credit decisions are made by FICO scoring models. Okay. Now, in the mortgage world specifically, they look at the FICO scoring models 2, 3, 4, and 5. Okay. There are others, they go all the way up to 9 or so, and different ones tend to work in different industries. But in the mortgage world, I think it's 2, 3, 4, 5 is what we want to focus on. So if you go out to any of those free sites, check and see whether they're using the Vantage score or the FICO score. Now, what we want to do is once we get those scores, the mortgage world typically uses the middle credit score. So if you have a 550, a 575, and a 700, they're not averaging them. They're going to use that 575. Okay. So as we look at your credit, overall credit, we want to work on the middle credit score and the highest one if it's not in the strike zone. So if your credit scores, so we want to make sure that the middle and the high one are both high enough where we can get things done. So we don't have to worry about the low one. That's just the way it works. Now, most of the time we want to get those credit scores anywhere between a 600 to 640 to have you in the strike zone where we can get something done. And when I mean get something done, I'm talking about getting you into some of the down payment assistance and grant programs that are available so you can purchase with very little money out of pocket. Okay. Keep in mind, most of the creditors that you have, be it like credit cards, auto loans, student loans, most of them are only going to report to 1 or 2 of the credit bureaus. Not all of them. It's rare that they report to all 3. So ideally, what we want to do is we want to look for that middle credit score and the higher one if it's not high enough. And we want to look for different opportunities that we can isolate on those 2 credit reports to get a boost in your credit score so we can get them up in this, get the scores up in the strike zone. Okay. So what goes into a credit score? 65% of what goes into your credit score are what we typically focus on. Okay. That's payment history and credit utilization. Now, payment history accounts for 35% of your credit score. Okay. Now, ideally, we don't want to see any late payments in the last 12 months. If you do, it's not a deal killer. It just makes it a little bit more challenging. Okay. So do not at all try not to have anything late. Okay. So late is in the credit world is anything that's over 30 days. If you make a payment on a credit card 29 days after the due date, you're fine. 30 days, it's going to get reported. Okay. Now, if you do have some late payments, it's not crazy to pick up the phone and call the creditor. Ask them, hey, I don't know what happened here. Thought I made the payment. My history's been pretty clean. Any chance you could reverse that? Sometimes when you do that, you'll get a little bit resistance with that first line of defense. But if the answer is no, sometimes they'll do a courtesy. Oh, okay, we see you've been with us a while. We'll do a courtesy correction. If the answer is no, sir, I'm sorry, we can't do anything. I appreciate your time. Can I speak with your supervisor? You're going to find that if you kill them with kindness, 25% of the time, they may reverse that. Now, if you've got more than one late payment, chances are they're not going to do anything. And then use your efforts in other areas. Now, with regards to collection account, if anything gets turned over to collections, that should always be an alarm that goes off. Collections are 100% handled differently. Do not pay them off unless they are brand new. Okay, and we're going to go over collections in a few moments. The second thing that has a big impact is credit utilization. That accounts for 30% of what goes into your credit score. So balances. Ideally, we want to get your balances below 30%. And this is where people get a really good lift. This is one of the techniques that you'll get a quick lift on your credit scores. So if you have this is a common thing. People have a credit card with a $500 limit and they owe $500. That hurts your score. You're maxed out. It tells the algorithms that generate your credit scores that you're pushing the limit and the chance of default is dramatic. So if you pay that down, lately, I'm seeing people get a 30 to 40 point bounce in their credit score by paying down those high balances. So what I tell people is take those low limit credit cards and pay them down as below 30%, and you're going to get a big boost in your credit scores. If you can pay it down below 10%, even better. But ideally, the best bang for the buck is 30% or lower. So get that utilization down. Like I said, between utilization and payment history, that's 65% of what goes into a credit score. Those are things that we can control. There are some other issues, other things that are out there that I want to make you aware of, okay, because people make mistakes with some of these things. 15% of what goes into your credit score is the length of your credit history. So if you have some old accounts out there that are zeroed out that you haven't used in a while, do not close them. Okay, last time I looked at my credit report, I had an old Sears account and an old JCPenney account. Don't know how, but don't know how they survived my bankruptcy 15 years ago, but it did. And they're boosting my credit. I don't want to close them because that's got 20 years or 30 years of history. Actually, probably 30, probably close to 40. So those are credit cards that I think my wife brought to me when we got married. So anyways, so credit history is huge. Sometimes people think, oh, I haven't used that in a while, I'll close that out. Well, if you close that out, you're going to lose that length of history on your credit and your scores could go down. So don't close those old accounts. Another thing, do not pay off your loans prematurely until you have a high-level conversation with myself or a credit professional. And the reason I say that is, think of it this way. If you have what they call a thin credit profile, which means maybe a credit card or two and an auto loan, that's like 3 what they would call trade lines. You pay off one of those trade lines, say I've got 4 months left on my auto loan. I had this happen a couple months ago. They paid their auto loan off. You know what happened? Their credit scores went down. You think that it's going to show up And it does. It shows up, hey, John paid off this loan early. Common sense would tell you that your scores would go up as a result. It doesn't. You're losing a trade line or a line of credit. Their scores actually went down. Okay. Now, I'm not telling you to not make your payments. Make your prescribed payments. Just don't pay them off early unless you have someone look at your credit, because this is a game of inches. A lot of the programs that I help connect people with, it's pass or fail. If the program requires a 600 credit score and you come in with a 599, you're going to get denied. Now, it's not too challenging for us to maybe get it up another point, but it is kind of a pass-fail type of thing. There's no negotiations. Okay. So I always tell people, try to use all the tools that we have at our fingertips, because like I said, 600, 601, you're in. 599, you're out. Okay. Next thing, how do we handle the big things out there? Right now, student loans, big conversation. A lot of those have come out of deferment or forbearance. I shouldn't say deferment. If you're in school, they're still deferred, but forbearance, especially after COVID. So what's happening is these loans are showing up as being in default if you're not making any payment arrangements on them or making any payments on them. Now, this isn't the end of the world. This can be corrected fairly quickly. It takes a few months. Okay. So 4 different types of student loan classifications: deferred, forbearance, default, and income-based repayment. Those are the things we want to focus on. Now, if your loans are in default, I would ask you to reach out to your student loan servicing company. If you have multiple loans, get them consolidated if you can. See if you can do an income-based repayment plan. Okay. And that's basically just a payment based on your income. Sometimes they are telling people you don't need to make a payment. Your income's too low. Do not accept that as an answer. Tell them, you know what, thank you very much, but I'd like to start making at least $10 a month, $20 a month, $30 a month. The interest clock keeps ticking. Your balances are going up. And most lenders on these down payment assistance programs and grants, they will not take a 0 payment on a student loan because it's income based. They want some, because they know the interest clock's kicking and it's not going to be that way forever. So, but if you give them an income-based repayment plan of $10, $20, $30 a month, they can use that number to calculate in your debt load when it comes to applying for these. So that's the workaround. Now, if you are, again, in default and you're able to get that income-based, you can ask for what is called basically a fresh start. And what that is if you make your payments on time for 90 days on the student loans, they are going to flip it from showing up as in default on your credit to a positive. So that is huge. What that means is if your credit scores are down I've had people a couple of months ago, their credit scores were 550. Their student loans were in default. They did the Fresh Start program. And what happened is in 3 months, after they made 3 payments, it went from showing in default to paid as agreed. That 550 score shot up to 650 because what was a negative is now a positive. Okay, that's the way to handle it. It does take 90 days. It used to be a couple of years ago where some people were making, I'll just make 3 payments right out of the gate, and they would flip it in 30 days. They are on to that technique and they no longer do that. So you do have to make 3 payments. Okay. Now, if your loans are deferred, which means you're usually still in school, you do need to establish repayment terms in order to get approved for some of the down payment assistance and grant programs that I help connect people with. Okay. So you do need to pull them out of deferment. Pull them out of deferment, get that income-based repayment plan. And after you purchase a home, you can put it right back in deferment. Say, you know what, I decided to go back to school. I'm going to put these student loans in deferment. Okay. Kind of an awkward way to do it, but that's how we handle it. Okay. So we've covered deferred, forbearance, default, and income based on student loans. Any other questions on student loans out there? Please hit me up in the chat box and I'll be happy to go over that in detail. Okay, repossessions. Seeing a climb in repossessions. Can't tell you how many people I work with that co-signed for a family member or friend. They didn't make the payments, and then the car was repossessed. It happens. Okay. And I know we tell people, don't co-sign for family and friends. That's the thing. I get that. But I've done it myself. I get it. You know, if you can't help your friends and family, what are we here for? I understand it. Try to avoid it if you can. Okay. But if you are in that position, there are ways to take care of things. Number one, repossessions that are over a couple of years old, they are starting to be more lenient on those, and they're not asking that they're being paid off, provided it's an isolated incident. If that's the only thing on your credit, they're not focusing as much on it. If we just say, hey, we co-signed a loan, we don't know where it is, that person is, that type of response. If everything else is in order on your credit, we can get around it. Now, suppose you're one of the, a lot of people that purchase cars on B lots. Don't know where everybody is, but in southeastern Michigan, where I'm located, there are a fair amount of auto dealerships on B lots where people buy them, look great, they drive off, 30 days later, big engine failure, and they're stuck with the car. No satisfaction, no help, and still have payments. Okay, that becomes a little bit more challenging. It depends on how old it is. Okay, I always tell people sometimes it's worthwhile talking to them. If there's just a little balance on it, maybe it's worth paying it off if possible, or maybe it's worth trying to reestablish payment terms on it, get you approved for the down payment assistance programs or grants, and then what you do with those repayment terms once you're in the house, that's 100% up to you. No judgment there. Okay. So next one, bankruptcy. Saw a question for bankruptcy just a few moments ago. So when it comes to bankruptcy, there are two types of bankruptcy. There's a Chapter 7 and there's a Chapter 13. Okay. First and foremost, bankruptcy, I consider that a tool. Okay. I look back where I was in my life. When I did my bankruptcy, I thought that was the worst thing I could possibly do. Truth be told, it was the best thing I ever did. It was a huge reset. And it's a lot easier to rebuild from it now than it was back then. But it's there. Okay. If your life is a business and the business is failing, why most businesses don't think twice about going into bankruptcy. Don't be afraid or ashamed of it yourself. It is a tool that's out there to give you a reset. Okay. And sometimes people ask me about it, and I think it's a viable option. If you are thinking about, let's put it this way, if you're thinking about using debt consolidation loan, not debt consolidation loans, but debt consolidation companies, I always say, if you're at that point in your life and things are that tough, you probably should entertain bankruptcy. And I'll go over in detail why I said that, because most of those debt consolidation companies, they're in it for themselves. It's the only thing I can say. But with regards to bankruptcy, Chapter 7, unfortunately, we can't do anything till the bankruptcy is discharged 2 years. But once that bankruptcy is discharged, you have an opportunity to start rebuilding. The algorithms that create your credit score are very forgiving after bankruptcy. They know you just had the slate wiped clean. So you start building right away, your scores can go down from, I've seen people below 400, 390s after a bankruptcy, shoot right up because they got that fresh start And we started rebuilding secured credit cards. Nowadays, they're giving credit cards to people after bankruptcy because the credit card companies know you got that pass. And you should be able to make a payment on a $300 credit card limit. Okay, so it's important we build credit as soon as possible after that bankruptcy is discharged. And it is crucial that there are no late payments. If you have any late payments on a credit card after a bankruptcy, I don't know this is a fact because the algorithms are all hidden. We don't know. We can only work with experience. But in my opinion, if you have a late payment on a credit card after a bankruptcy, you are going to get spanked twice as hard with a credit drop because the algorithms know you just had a bankruptcy pass. Okay, so it is a lot more important that you are on time with those payments for the first couple of years after you get those cards after a bankruptcy. So Chapter 7, 2 years after the discharge. Chapter 13, if anybody is on a Chapter 13, and a Chapter 13 is when you reorganize, where you take all of your debts, they lump them together, they negotiate the balances down, and you make your payments to a trustee that's basically appointed by the bankruptcy court. So once you've made 1 year payments to the trustee, you can actually get a mortgage. Okay, most people don't realize this, but as long as you have 1 year timely payments to the trustee, we can get a mortgage with the trustee's approval. I've only had one trustee fight a customer of mine on this in the many years I've been doing it. And what happened, his story, he was actually living in Waterford, Michigan. He was divorced. His kids were in Waterford schools. And what he was going to pay for renting a house to keep his kids in the same school district and make it easier on his family was significantly higher than if he bought a home. So for whatever reason, the trustee was fighting us on this. His attorney filed a motion to go in front of the judge and challenge the trustee, and then the trustee bent and caved right in. That's it. So he ended up getting it. We ended up buying the house. It worked out well. He actually used a down payment assistance program through the state of Michigan. Gave him $10,000 to buy a house while he was in Chapter 13. So don't let anybody tell you that it can't be done. Now, once your Chapter 13 is paid off, the rules are kind of screwy. You have to wait 2 years after it's paid off to buy something. Don't know why that is. And there is chatter about that getting changed because it doesn't make any sense. Somebody's made their payments to the trustee for several years. You would think, my gosh, they're a great credit risk because they don't have that payment anymore. But that's a flaw in the system. All right, now the most important thing that I want to talk about are collections. This is where people tend to make mistakes. If you have collection accounts over 2 years old, please leave them alone, okay? What happens is, and I just my own experience, when I bought my first home, how many years ago, actually around credit scores back then, that would have been back in the early 90s. Anyways, I thought, oh, well, what makes these? Well, I had a few medical collections, $50 here, $80 here. Let's go back and pay those old things off. Back then, it didn't matter because I didn't have the credit scores weren't around. But if you pay off old collections now, what happens is it's going to show up on your credit next month as collection paid. And your scores are going to drop because you reactivated an old collection account by paying it off. So I always tell people, if those collections are over 2 years old, leave them alone. Don't touch them. We don't want your scores to go down. Okay? Now, if the loan program that we get you approved for comes back and says, hey, we want that collection paid off, we'll pay it off after we get the approval because the approval will be subject to paying that off. Then we go back and pay it off. And if your scores go down, it doesn't matter because we'll have your credit scores pulled and locked in for 90 days. And if we pay them off beforehand, we don't really have a lot of negotiation power because we need it. If we wait till afterwards, we can negotiate the balances down. So let's say, for example, you've got a old cable bill. Here's one, $300. Remote controls in a box didn't get back after you moved. Okay, that $300 cable collection surfaces and you need to pay it off. We get you approved for the program first. Then if they insist that it gets paid off, we go back, we can negotiate with them and say, you know what, I'll give you $100 for that $300 bill. The mortgage company doesn't care what you settle for once that approval's issued. They just want to know that it's paid off. Okay. Now, collection accounts that are less than 2 years, we want to pay those on a case-by-case basis. Medical stuff, leave alone. Okay. Anything below $500 for medical should not be hitting your credit report any longer. Okay, so don't worry about medical bills. It should not get factored into your credit scores. Anything that's 1 to 2 years old, depending upon the size, we might want to run that through a credit simulator to see if we're going to get a boost out of working with it. If it's 0 to 1 years old, that's something we want to talk about. Certainly, if it's a collection that was filed within the past couple of months, we probably want to pay that off. And then we'll see a bounce in your credit scores. If it's over, 3, 6, 9 months, we might want to leave those alone or run them through a simulator. So paying your collections off doesn't mean your credit scores are going to go up unless it's a recent collection. That's why we have to treat those on a case-by-case basis. Okay. All right. Next thing, my steps. This is what I do when I look at a credit report. Okay, so the first thing we want to do is we want to go out to, it's basically annualcreditreport.com. We want to get your free credit reports. Okay? You need all 3 credit scores. If they charge you for it, pay it. We'd like to know what your FICO scores are. Okay? We're going to walk you through this, so you're going to do this on your own. So you're going to save the money. You're not going to have to pay to get your credit fixed anymore. Okay? That's one of the reasons I don't see these credit repair companies advertising the way they used to, because their days are numbered. AI is taking over. So once we have your 3 FICO scores, we want to determine whether we need to work on 1 or 2 credit scores. Remember I said we need that, we're going to focus on that middle credit score. And we want to make sure your high score is in the strike zone too. Okay. So we want to figure out which one of those credit scores we need to lift. So once we look at those middle scores, then we know what reports to look at. Okay. So each credit bureau is going to have a credit score. Take the 2 scores. Okay. If it's TransUnion, Equifax have the middle and the high scores, those are the 2 credit reports that we're going to focus on to get your scores up where they need to be. Okay. Now, it's important that you understand your credit report. They're confusing. They're all different. But ideally, we want to look at what's driving those low scores down. We want to look at late payments. What are the collections? Where are the credit utilization at? We want to analyze what they call all the open trade lines. And a trade line is just a line of credit. Okay, that's just the jargon they use in the credit world. So they want to analyze all your open trade lines, and we want to look for utilization. If you have credit cards, do you have collections or late payments? We want to analyze all of that. We want to know that. Okay. Keep in mind, you need to typically have at least 2 to 3 trade lines on your credit report to get into some of the down payment assistance and grant programs I help connect people with. At the very least 2. Okay. I'm going to show you how to create those if you don't have any in just a few minutes. So we want to look whether you have new, old, or alternative trade lines. Okay. And I'm going to go over those in a few minutes. A lot of times we can actually take your credit and run it through a credit simulator to see what the low-hanging fruit is. Actually, if you go out to Credit Karma, they have a credit simulator. It's the Vantage score, but still not a bad way to do it and look at things. Okay. We also want to look at if you have a thin credit profile, meaning you don't have a lot of trade lines, we want to look at ways that we can add new credit. Do we need to add a secured credit card or a secured loan? Or maybe ask someone if you can be an authorized user, okay? Those are things that can be added to your credit to get those trade lines to satisfy the requirements. A lot of these trade lines need to be out there for 12 months, and I'll go over how we add alternative trade lines to work around that, okay? Then, if we do have some things that are serious or incorrect that we need to dispute, there are ways to send letters out, and I'm going to share that with you in a few moments. Okay, so remember, we want to go out, get a copy of your credit report, analyze it. The things to do. We want you to sign up for some of the free credit monitoring services like Credit Karma, Credit Sesame. If you need to have your credit run through a simulator, reach out to me. I'll connect you with a lender that will do that free of charge. Okay. Increase credit card limits to reduce balances. This is becoming harder to do, but it is possible. Suppose you have a credit card with a $1,000 limit, or excuse me, let's say a $300 limit, and you owe $300. If you increase that $300 limit to $1,000, now your utilization is below 30%. Okay, not all credit card companies are going to be increasing credit limits, especially now that Washington is talking about capping credit card interest rate at 10%. I mean, it sounds great on the surface, but truth of the matter is what's going to happen is the people that don't have great credit are going to find it's a lot harder to get any credit at all. And don't get me wrong, I'm not a fan of people paying, 25, 29% interest on credit cards. I think that's predatory. But I use that stuff as tools to get people's credit where it needs to be. So, anyways, the credit card industry is pushing back in a way that could cut a lot of people off from getting credit. So people be forced to use secured cards, which aren't a bad thing. So, and we'll cover what secured cards are in just a moment. So remember, we want to pay down those credit card balances below 30%. Don't pay them off. I find that if you pay your cards down and leave a little balance on it, whether it's $10, you're going to get a bigger lift than paying it off to zero. Now, if you have a friend or family member that has a good credit card, high limit, low balance, great payment history, and has been around for many years, if you have that type of person in your life and you can ask them to be an authorized user if possible, that's huge. Okay. 90% of the time, that's going to work out famously. And I say 90% because what happens several years ago, the credit industry caught on to what people were doing, having authorized users added. But in that credit world, they don't always put the start date for that credit card when you're added as an authorized user. They don't put that start date, the date that you're added, like they're supposed to. They put the date that the card was open, which makes it look like you've had it for many years. Okay, so 10% of the time they do it the right way, in my opinion. So, but you'll still get a bounce. Don't get me wrong, but you're not going to get as big of a bounce if they're timed and they do it the old-fashioned way because it's a manual entry for them. So that being said, authorized users, I get it. It's never comfortable asking people for favors, especially with finances. So I always tell people this is how I kind of frame the conversation. I would basically go to a friend, hey, John, you know what? I've been approved for a down payment assistance program and grant to buy a home with just a few $1,000s. The only thing that's holding me back right now is I'm short one line of credit on my credit report. Is there any way that you could possibly add me to your credit card? I don't need the card. I don't need any money. I just need a little bit of that power that you created with that one of your credit cards to get me over the edge or threshold with regards to that requirement. Is there any way you can help me out? I mean, you're not asking for anything other than to make a phone call. You're not asking for money. You're not asking for the card. You're just asking for a little help. I think if you frame things that way, I think most true friends or family members would be happy to help out. I know I would. Okay. Next one. Open a secured card or loan as soon as possible. I'm going to go over what those tools are and how powerful they are. Next thing. Gather alternative 12-month statements, trade line statements if needed. Now, there are ways to get accounts that you pay every month added to your credit report, like rent or cell phone, car insurance, different subscriptions. We can get those items added to your credit report. I'm going to go over those in a few minutes. That's how, if you have no credit, we can build credit. Okay. And set up payment arrangements for any collection accounts over 2,000. That's when I insist we have a phone call before you do that. May not always have to do that, depending upon your credit profile. Okay. So next thing, the don'ts. Please do not apply for new credit. I know people go out to Credit Karma. Oh, you got an 80% chance to get approved for these cards. Do it. And then you apply for them and you get denied. And now you've got 3 inquiries on your credit report that we've got to explain. Don't do it. Don't apply for new credit unless we have a high degree of certainty that you're going to get it. And I don't trust those algorithms. That's how Credit Karma and some of those free platforms make their money, by getting you to get credit through their suggestions. Don't fall for it. Okay. And like I said earlier, don't blindly pay off your collections. 2 years leave alone, less than 2, case by case, medical, blah. We went over this before, so I'm not going to go over it again. Don't pay off your credit card balances. Pay it, leave a little bit on there. Okay. I find it, people's credit scores will be a couple of points higher if they leave a couple of dollars on their credit card versus pay it down to 0. And remember, like I said earlier, 1 point can make a difference. And like I said earlier, don't pay off loans prematurely. And don't become an authorized user on a new account or an account with any late payments. And in big bold letters, do not employ debt consolidation services. Okay? Repeat, do not ever go to debt consolidation services. And I'm going to preach here a little bit, so I apologize for that. But reason I say this, and these companies are starting to surface right now, what they do is they go out there, they tell you, oh, we're going to help you. We're going to take care of all your creditors. Okay. So they're going to tell you, stop making your payments. Don't pay any of your bills anymore. In fact, send your money to us and we're going to make those payments for you. And we're going to manage this and we're going to call them and your life is going to be great. Doesn't work out that way. What they do is you start making your payments to them. They put all your creditors on notice that you are now in debt consolidation and all the payments are going to be made to them through the debt consolidation company. So these debt consolidation companies take all your payments. And you know what they do? Those first 6 months, all those payments, that's the debt consolidation's fees. That's where they make their money. So they keep all of it. And just when your creditor is fed up with it, not getting paid, that's when they start dripping money out to the creditors. Sometimes it takes up to 6 months. So right when your creditor goes, you know what, we haven't received anything from your debt consolidation company, it's going on for 6 months, forget it, we're going to sue you. That's when they start dripping money out to the creditors. Okay, so the thing here is, if you are in that bad a shape, you should probably be doing bankruptcy. That's just my personal opinion. I'm not an attorney, but there's no sense going through all that pain and not having the protection of a bankruptcy court. Okay, you got no bankruptcy protection when you're in this debt consolidation services. And when you're applying for credit, what happens is every one of your creditors are going to put in no payments made in debt consolidation. So on your credit report, it's going to say debt consolidation, debt consolidation. Every creditor, when they see that on your credit report, they treat you like you're in bankruptcy. So if you're going to get treated like you're in bankruptcy from a credit world standpoint, you might as well have the protection of a bankruptcy court. Okay, so that's my feeling on debt consolidation companies. I find that people get ripped off and misled on that. So, all right, let's get into some of the building tools. These are the tools that I readily coach people on. If you don't have a credit card, pick up a secured card. Okay, you can usually get them through Credit Karma, Credit Sesame, Capital One. Okay, they're the big boys out there. They offer a good one. You send them $300, they're going to send you a credit card with a $300 limit. It's important you use it as soon as you get it, so they report those things to the credit bureaus. It typically will take 30 to 60 days for it to show up on your report, but great way to do it. Excuse me. So, get a secured card as soon as possible. Next one, secured loan. Very powerful tool. Okay, I'm in southeastern Michigan. There are several credit unions that offer this. I bank at Michigan First Credit Union. They're located in Southfield, Michigan. They do a good job. Secured personal loan. What this is and how most credit unions do these are you give them, I'll explain how Michigan First does it. You give them $525. They charge $25 to do this. The $500 you give them, they're going to put in your savings account. They're going to open accounts for you to do this. That $500 that goes into your savings account gets locked down. You can't touch it, but they're going to give you a loan right away and put it in your checking account for $500. So it's going to look like you got 500 checking, 500 in savings, but you can't really touch the ones in the savings. Then what happens is you pay that $500 loan off over 6 months. They're going to take $80-something a month out of your checking account to pay that loan back. Okay. The thing is, when they report this to all 3 credit bureaus as a personal line of credit, which is one of the hardest things to get. I've had people whose scores go up 40 to 60 points in 45 to 90 days just from this one maneuver. Okay, so great, powerful tool. Next one, authorized user. We talked about this earlier, works 90% of the time. Okay, if you have someone out there that has their credit in order, hey, great way to bounce your credit. Alternative trade lines. We're going to focus here for a minute. Alternative trade lines. Remember I said you need a couple accounts that have at least a 12-month history? Plus we need a credit score. So keep in mind, if we do the secured card, the personal secured loan, or you get added as an authorized user, that's going to generate a credit score for you. But it's only going to be 1, 2, or 3 trade lines. Okay, and it's not going to have that 12-month history. We need to have a couple of things with 12-month history. That's where alternative trade lines come into effect. Now, there are third-party credit companies that can take your information and get it added to your credit report, like rent, auto insurance, P.O. box payments, storage unit payments, cable bill, cell phone bill, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym membership. 2 years ago, I had a young man that had a credit score that was in the strike zone. Okay. Didn't really have any trade lines. Don't know how he got a credit score. Maybe, I think it was an old auto loan that he might have paid off when he was in. But anyways, you know what it was? I think his mom had him added as a co-signer on an auto loan to build his credit. I'm not sure what it was. But anyways, he didn't have enough trade lines. So what we did, he was a gamer. I think he had PlayStation, Xbox, and one other. Okay, $9.95 a month, coming off of his debit card every month for a couple of years. So we're able to take 12 months bank statements and highlight every month. It was automatically taken out, $9.95, $9.95. We send all 12 bank statements to a credit aggregator, and then they put that on the credit report as a trade line. Boom, we passed that requirement. If we need two, he had three. So these are a little bit more work, but it's not that much work as long as you have everything in order. So those are alternative trade lines, and they can be any of those options that I listed. Now, we talked about credit monitoring services. I'm a fan of Credit Karma. I know a lot of people in the mortgage world don't like it, but me, it's free. I like free. So I just know that when I go on there, they're using the Vantage score, not the FICO scores. So don't get misled there. Vantage scores are always a little bit higher than FICO scores. Okay, they're a little misleading. They build people up to try and issue them more credit. Don't fall for it. But it also allows you to monitor your credit and any changes on it. And that's the important part. So if your credit scores go up, Credit Karma will send you an email. If someone reports something negative on your credit report, Credit Karma will send you an alert. This changed on your credit report. Now, Credit Karma only monitors Equifax and TransUnion. And remember, there are three. There's Experian too. So I want you to go to Experian.com and subscribe there. They have a free version. And theirs includes a FICO score tracker. Okay. So you get Experian.com, you'll get the Experian credit report for free. Credit Karma covers the other two. Okay. We talked about credit consolidation companies. Now I'm going to talk about credit restoration companies. You don't need them. Okay. We just went over everything that they do. They tend to do it automatically, and they charge anywhere from $100 to $200 a month, plus whatever processing fees, things like that. You don't need that. Okay. Artificial intelligence has changed that to the nth degree. If I were looking to fix my credit right now, what I would do is I would go out to annualcreditreport.com. I'd probably pay for the scores, pay for the FICO scores, download those credit reports. And this is what I would do. I would take those credit reports, copy them, save them as a PDF if you can, upload those to ChatGPT or Claude or Grok. Just do ChatGPT. That's the one everybody knows. Artificial intelligence, OpenAI. Upload that credit report and just put in go out and look for some prompts. But you can just say, hey, I'm uploading a copy of my credit report. I'd like you to identify any areas that could be challenged or could be possible mistakes, and ask it to end. I want you to draft the letters with the proper address for each credit bureau to dispute or just talk to it. And it will spit those letters out for you that all you have to do is print, pop in the mail with a little bit of information. I think they typically want to see like a bill from your maybe a utility company tying you to your current address, and maybe a copy of your driver's license, maybe a W-2 with a social security number on it, type of thing. And ask AI, hey, what items do I need to include with this? Put all of it in there. Be as detailed as you can, and it will spit it out for you. It's amazing the results people are getting right now. Okay. All right. Now, where do we go from here? Any of you that have been following me a little while, I think you know I love what I do. I love helping people get into position to purchase homes with very little money out of pocket. And I also understand that your credit score does not define who you are as a person. So don't let it. We can get on top of it. We can turn it around and get that score where it needs to be to get you and your family in a home. Okay. Or if you just want to get your credit score up and you're already in a home, I get that. I always like to pay it forward that way, because I find that there are a lot of misinformation out there with regards to how to deal with your credit. And I find it almost offensive what people tend to charge too. There's no shortage of people on whatever, Instagram, TikTok, telling, there are a lot of tools out there, a lot of professionals. They charge thousands of dollars. You don't need to do it. With AI here, you can take the bull by the horns and do it yourself. So never hesitate to reach out to me. One thing I am going to ask everyone today, if you could please do me one favor. Don't ask for much, but we are really trying to push our new website and the company that we're launching, okay? And that company is called Own the Roof. We are 100% trying to educate as many people as we possibly can about all of the down payment assistance programs and grants that are currently available so people can get out of the renting rut and get into home ownership with very little money out of pocket. And I find that the feedback that we're getting is so powerful from the website. And what I mean by that is we just redid the website. Okay, actually, if you don't mind, I'm going to take you out there right now. This is our new website. There it is, helping people find grants to buy homes. Like I said earlier, there's two things that hold people back. It's typically money or credit. Typically, in my opinion, what I've come to learn over the past 5 years, what really holds people back is hope. A lot of people don't have hope. And you know what's funny is a month ago, we were about ready to launch this website and we sent it out for testing. And I always get people that, say, hey, John, this looks a little bit too good to be true. Seems like a scam. And I get it. In today's world with what's out there, there are a lot of scams out there. I'm not going to pretend to be insensitive to that. We all get calls all day long. It's offensive. But we got that back on our website. So we sent it out as a test and people were like, hey, as clean as this might be, they're like, what do you charge? What are the fees? It seems too good to be true. So out of the 100 people that we sent this out to and asked for opinions, 50% of them thought that I was a scam. And that really hit home. So we didn't scrap everything, but we're like, hey, we need to be as transparent as possible. So people probably still don't believe that this guy's doing free webinars, helping people fix credit. Yeah, that's just, I enjoy doing it. And as a result, it pays dividends. So a lot of people don't go through these webinars. They don't know me. So what I'm asking of you is if you could please click that link and leave a review, maybe share with it, let people know that, hey, this company's for real. This guy's for real. Right now, I've got no reviews out there. We're just starting this. This is our campaign right now. We're about to go back to all of our previous customers and ask them to help us out too. I'm finding that is probably going to be the key. We could try to help as many people as we possibly can, but if they don't shout from the hills that these guys are legit, then I don't know if we're going to be able to help as many people as I would like to help. So that's what I'm asking of you today. If you could go out there and leave that review, I'd certainly appreciate it. Now, I want to get into some of these questions. So let's go in here. All right. Oh, got somebody at Lansing. Hey, Lori in Lansing. Great programs in Lansing. I've got some great agents in Lansing that are very familiar with programs up there. We talked about Grayling, Gaylord. Dearborn's an underserved community that offers a fair amount too. Chelsea, sorry you had to go through that pain of bankruptcy. I hope you're coming through the other side. Certainly enough time in the rear view mirror where you should be in decent shape. Hey, good morning, Yolanda. Thanks for attending. Hey, Brenda. Hi, how are you? Got it. Chelsea just put 200. She's put a lot of student loans in forbearance. Hey, Chelsea, that's a pretty substantial amount. Why don't you schedule a call with me? Here, let me give you a link. Everyone, this is a link to my calendar. Please schedule a call with me. Or if you like, here's my cell phone number, 248-252-7283. Now, I am a self-professed phone jockey. I'm on the phone all day, and my wife calls me a chatty Cathy because I really want to make sure that I can help everyone and everybody gets as much time as they need. So if I'm not available, leave a voicemail. And every now and then my voicemail gets filled up. Text me. I get a lot of calls on my calendar, and life gets in the way of everyone's plans. I get it. So not everybody can make their calls. So I can call you when some of the people can't hold those calls. Okay. So text me your name and I'll get back to you as soon as I can. Okay. So, but there's a link to my calendar. Oh, Yolanda, thank you so much. I appreciate the kind words. Any other questions out there? Hope I didn't overwhelm people. Sometimes I tend to get into the weeds a little bit with some of these topics, but I really, really enjoy passing it along and helping coach people up. You'd be shocked how quickly we can turn things around for most people. It's just that we have to sometimes just look in the mirror, okay, and wrestle with it. And some people, I've been helping them with their credit for, heck, sometimes it's a year, sometimes it could be 2 years. I get it. Sometimes we're on track, credit scores go up, and then all of a sudden, boom, car goes down, $2,000 fix. Okay. You got to keep food on the table. I totally get that. Okay. When I shared with you my situation 15 years ago, yeah, I had to make those decisions. Do I pay some bills or do I put food on the table? Humbling times, very humbling times. So I get it. So our plans get derailed. So anyways, +1 in Michigan. Great. Miss Hardaway, you are welcome. Leah Perry, the whole topic is overwhelming. To be educated is a gift. Wow, powerful words. Thank you so much. The gift for me is when I come in on a Saturday morning and I've got 20 to 30 people on a webinar that want to learn. It wasn't until 15, 20 years ago that I realized the actual gift was being able to give to others. So it's amazing. I'm the tail end of the baby boomers, born in '64. And, we were raised that it was all about us. Keep chasing numbers. It's all about money to define success. It wasn't until I was humbled 15 years ago that I realized what things were really about. And I still thank God. For me, my wife, my kids, to come through with all of that and have highly functioning children and a wonderful wife of approaching 40 years. This is just, that to me is the biggest gift. And the fact that I have acquired this knowledge over 38 years of real estate and mortgages and all of this stuff, and I'm able to pass it along to people and help people get on a path where they maybe can build some stability and financial wealth. Oh my gosh, that's the one thing. Here's another thing. If I can ask a favor of all of you, if you have any young family members, now my kids are anywhere from 24 to 34. Okay. Those generations are giving up on home ownership, and sometimes they need a kick in the butt. Okay. And if any of you are in that age right now, I apologize. I don't mean to sound condescending. Do me a favor. I feel like it is our job to kick them in the butt and get them moving, because I look back, if they acquired a house in their 20s, their financial net worth is going to be so much higher when they want to retire. Okay. Whether they want to or not. Okay. Some people are like, oh yeah, I could buy, but I don't want the responsibility. Well, maybe you don't want the responsibility. But you know what you can do is start building your nest egg. So maybe if you don't want that responsibility, maybe you want to retire at an early age. Heck, right now, it took me almost 50 years to figure out what I was truly here for, and that's paying it forward and giving this type of knowledge and content to people so they can live their best lives financially. I'm all about financial wellness. So any way you can pass it along to that next generation. When I start looking at the average first-time home buyer being 40 years old, that's concerning. Okay. Oh, Brenda, you're having trouble getting to it. Let me type this in here. To the website, are you having trouble getting to the website or to that link for the review? Here's another link that might work for the review too. Okay, let's see any more questions. Thank you. Yolanda, thank you too. OnePlus, you are welcome. Brenda Sandifer. Let me know if you don't get to that website. And feel free to reach out to me. I don't have my first scheduled call this morning till 11 a.m. So if there's anybody that wants some personal coaching, you can actually reach me for the next 45 minutes. Okay? You are welcome. I don't see any other questions out there. We'll give it another minute. Patrick Oliver, thank you for making it today. I just noticed you there. Sorry I missed it. Appreciate the kind words, sir. Hope all is well in your world. Mrs. Hardaway. I have a Mr. Hardaway I've been talking to a while. I hope it's a relation. Nice man. All right. Thank you, Chelsea. I look forward to connecting with you. God bless you too, my friend. One of those links, they are adding rent. You know, when it comes to adding rent, there are some companies out there, Christina Ross, where they will add your rent for you. I think your landlord has to subscribe to it. There are a couple of different rent platforms. If you go out and Google actually it's Gemini with Google, how to add my rent to my credit report, you'll run across some of those services that will in fact do that. When you go through that though, Christina, make sure that they're going to report to all three credit bureaus. Okay. Oh, okay, so someone's asking a question. Who do we reach out for consolidating student loans? You're going to reach out to your student loan servicing company. Now, if you have a couple of different student loan companies out there, you do want to ask them, hey, tell them, I want to consolidate my student loans. What's your interest rate? Okay. They want to consolidate your student loans. Okay. They want your money. So pick one against the other if you have two different student loan companies. Okay. But they'll consolidate them for you. And then maybe ask them if you need like the income based and things like that. That's my husband. Great. Thank you, Mrs. Hardaway. Good. All right, Brenda, looking forward to that call. Christina Ross, you are welcome. Mrs. Hardaway, look forward to it. Okay. All right. No more questions. We are going to call it. For those of you that haven't been outside today, I feel like it was a few degrees warmer coming into the office today. So no sunshine though. So hopefully it's done snowing for a little while. For those of you that aren't in Michigan, hope wherever you are, you have a wonderful day. And hope that our paths cross again soon. Thank you all so much for showing up on a Saturday morning. And if I can ever be of any assistance for anyone in your world, friends, family with regards to connecting them to some of these grants, down payment assistance programs, helping them. Love paying it forward. So please pass my information along. Thank you all very much for attending on a Saturday, and hope our paths cross again soon. Have a good day. Goodbye. Thanks, Yolanda. Look forward to it. Okay. Adrian Lark, how do you make sure you're okay? Oh, my Facebook and YouTube. Sorry, I can't always monitor that way. I'm doing it. Got a question here. How do we make sure a paid off debt will reflect on your credit report properly? There are some specific we need to do to have the creditor do it. That is, each creditor is responsible for that, Adrian. So if a creditor is not reporting that properly, you do need to reach out to them and ask them on a case-by-case basis. And when you're doing it, make sure that they are going to report to all of the bureaus that they typically report to. Okay? So, all right. With that being said, any questions on Facebook or YouTube? All right, we're going to close it down. Thank you all for watching. Have a wonderful weekend.